ไม่พลาดวิดีโอใหม่กดติดตามกดกระดิ่งกริ๊งๆแล้วก็อย่าลืมกดไลค์ด้วยจ้ากดเข้ากลุ่ม Olymp Trade Thailand ชุมชนออนไลน์นักเทรดได้เลยจ้า
Go ahead and open up these quotes, and then you can use these as proof to either your side of the story or what actually happened. And actually, you can compare these quotes to Bloomberg or Reuters or the stock market to check that the asset prices are the same, which they are. Obviously, I've done the check before. All right, so hello, Shabana Khan. Welcome. Good to see you, my friend. SpongeBob looking at the pound dollar and the euro dollar, looking good. Yeah, actually, it is going to be a very volatile week today, or this week. All right, guys, let's get started with the webinar. Thank you for coming today. It is a pleasure to be here with you guys. Let's get started with the oil market. Now, here we have an obvious bullish trend. We're going up higher, and we're consolidating right above this level at 61.35. This is a very important level. I want you guys to watch it as we've had a down day today. But the candlestick for Friday's trading was just incredibly bullish, right? We thought we were going to have a breakout all the way up to this level. So what I want you guys to check out for today and tomorrow, trading the oil market is going to be very, very productive. There seems to be a lot of euphoria. Companies are growing, and there's demand for oil because the supply in the Middle Eastern region has started to dwindle a little bit. Now, that's not to say that's the same picture across the whole world, because if we look at the economic calendar and we look for last week, let's go ahead and pull that open. From the 3rd to the 16th, let's go have a look at last week. I wanted to show you guys the Wednesday's crude inventories, right? So here we have 7 million, almost 8 million barrels just built up in the U.S. economy. That really did drag the price of oil down a little bit with it. But nonetheless, you can see that we're still right here at this trend line that started at like before the start of the year. And we're getting really close to breaking out of that. So if we stay above this level at 61.35 for the rest of today's trading session, you guys can go ahead and open up a trade position to the upside all the way up to this level of 63.10. So that's quite a nice chunk that you can capture, especially trading on the Forex market for oil. You won't be able to trading on the options market. And it should give you a really nice rate of return. Now, another thing that I wanted to get your guys' attention to is the markets are at all-time highs. Here we have the Dow Jones, the NASDAQ, S&P 500 at all-time highs. Now, one of the more interesting analysis that I've read and I've seen is that obviously these kinds of moves, they make a little bit headway and then they come slumping back down to this dark blue line where we have all of our stop losses hidden. So that's what the markets are going to be looking for. Me and my colleagues, we don't believe that the market has infinite potential to grow. The divergence that we can see if we put on a few indicators is just present all across the board. So the most important thing probably that we have here, if we go ahead and zoom in, we have higher highs, but the MACD indicator is not making higher highs. We just started breaking or getting closer to the top of this channel. We have the stochastic in greatly oversold territory for a really long time. And if we look historically, right, usually for that period of time, if we just measured this from here, for the 4th of the 4th, down to the 30th of the 4th, so about 26 days, 16th to the 8th. So same thing, about 26, 27 days. As you guys can see, this is a very overheated market, and we would definitely not recommend risking more to the upside. We would recommend, opening short positions. But where can you find really good short positions? Let's have a look at gold. This is a really, hello RB News, welcome. Hello Anita Okome, welcome. We're having a look at the gold market. As you guys can see, the breakout has happened. Actually, it happened on Friday and Thursday, the continuation. What do we have today? A very small correction. So you guys, please watch the gold market. We are also going to be shorting and opening positions down here to the bottom side. And more than likely, it will go to somewhere around this area and more than likely in the middle, as this is where most traders do their business at. So you guys have a look at gold. We have broken through this bottom level here, a little bit of consolidation, and we could continue going down. Now, what is the reason for gold going down? Well, more than likely it is the monetary policy for the US dollar. We have the US dollar strengthening, but it's also the trade relations between the US and China, how they're coming together. And we have some commentaries from the Chinese president, from the US president, definitely having a look at what is going on with the U.S. and China trade politics. Now, we did have a tweet from Trump. I really don't like basing my trades on tweets from Trump, but basically he said that China wants a trade deal much more than I do, right? He's got this face that he likes to do, and he has a speech that he's going to be making on Tuesday about the negotiations. I'm really interested in having a look at that speech on Tuesday evening. But in China, the news companies have all been saying that, oh, great success, right? We're coming not unilaterally, right? Both sides are making how'd you call it? Both sides are doing something for the other, but now it turns out that Donald Trump is not thinking about getting rid of some tariffs, and that the December 15 tariffs are still going to be in place, just postponed a little bit. So I don't really understand the dynamics there, where China is promising to do so much, whereas the United States, I haven't heard of a single promise to do something good. Right? It's only been, we're going to put tariffs on this, we're going to ban Huawei, we're going to ban some other companies, some of the people in charge of monitoring the protests, right? We're going to get involved with human rights in that regard. So a little bit of some back and forth. Definitely am not placing any bets on that situation going good. What I try to do, and I recommend you guys do as well, is have a look at these kinds of positions where we have actual breakouts, where actual things are starting to happen, only then pile on. So for gold, definitely shorting this bad boy in the time to come. And let's go have a look at the different indexes. The Hang Seng is actually under a lot of pressure today, starting from this morning, guys. Look at that. This is today's day. All the other markets are in euphoria. The Hang Seng fell. This is due to the protests that are going on in Hong Kong right now. If you guys know, the Hang Seng is a measure of the top companies in Hong Kong, and the protests have turned violent. This morning, unfortunately, there was a shooting, and one of the protesters has fallen, and it is a very, very unfortunate thing that this still is going on. But how can we make money on it? Trading the Hang Seng, there's going to be additional pressure. Now, I do recommend you try to go down to a lower time frame and try to capture some of the different breaks. So as you guys can see, just as with gold, we kind of were getting closer to here, and then we have a whole entire break. And after this break, this is 1 hour. This is one whole entire hour. You have the next hour right here. Ooh, and wonderful. We had somebody in chat talking about the GDP figures for the British currency. This isn't something that's going to be market moving, you guys. I did have my eye on it. Not something that I particularly recommend you trade, as the GDP figures have the possibility to be a little bit below forecast, but they don't have that huge market moving potential that we want for a crisp, clean, and easy trade. But let's go ahead and have a look at the euro currency and the pound currency. If GDP figures surprise us quite a lot and we have a huge fall, actually there could be some more room for this currency to fall. Now, where would be the first level where I put a take profit? That would be right around here. As you guys can see, where price initially corrected, this is a Friday to Monday move right here. So somewhere in the middle of this area. And hey, what do we have on our beautiful screen? We have the 200 SMA right here as well. So your initial take profit, if these GDP figures come out a lot worse than the forecast, which they have the possibility to do so, definitely go ahead and open up a sell position with the first trade or take profit you have at 126.63. But we will be watching this together. So for the pound, it does look predominantly bearish. I don't think that it's going to be a huge fall all the way down to 125, but there is selling pressure on the pound, and they're in a general election. What's going on with the pound right now? It is the first week of full-blown campaign election in the island of Great Britain. And it's a back and forth between the parties. We have the Tories, we have the Conservatives, we have the Labour Party, and they're all attacking the spending plan of the current government. They're saying they're fiscally irresponsible, that money is being just spent left and right without having any kind of success on the front of Brexit, on the front of immigration, on the front of any kind of business sentiment increase, right? It's all kind of been of a standstill, and the Bank of England is saying the same thing. We're not going to change rates or implement any kind of monetary policy until we have a clear direction to go. Now, keep in mind that the European Union gave the British government another extension with one rule, with one demand. That is that we have a deal before you exit. So now the no deal Brexit is off the table, you guys. So keep that in mind. When you're opening your sell positions, keep in mind that the pound internally is gravitating towards this level of 133, 134. This is where the pound wants to go. This is the path of least resistance now that we have an understanding that we're going to have some sort of trade deal. Whereas if GDP figures today, if they're really, really poor, we have a correction just a tad bit lower. So somewhere between this high right here, this spike, at 127, at 126.60, that is going to be your level of take profit. All right, perfect. So let me see what you guys are talking about in chat. Deepak Nishad, sir, if gold is rising up, means you Aussie USD pair rising up and Aussie JPY pair is falling down. So Aussie dollar, your Australian dollar USD pair, doesn't really figure into that equation. They are a gold exporter. They are an oil exporter. I'm talking about the Australian government, but they're not so closely tied to the price of gold. So the Japanese yen, you're absolutely right. If gold is falling, that means, okay, so here you have also if gold is rising. If gold is rising, then usually the Aussie-Japanese yen pair, right, is also falling because they're both safe haven assets. Yes, you are correct in that regard. Let's go ahead and look at the European currency. So the euro has been on a just crazy run since last week's break. We talked about this break in the beginning of the webinar. So for those of you that took my advice and took the position, congratulations. You made some money. The whole week was predominantly bearish and we could have a turnaround this week. Again, before you make any kind of buy positions, please make sure that you have a signal for entry. And it shouldn't be just one signal, it should be several signals. Like the first signal is the stochastic oscillator, or any kind of oscillator that you have, it should be going right back up, right? So wait until this guy gets right back up there. Same thing with the Euro USD. You should have some sort of bullish move to the top. Now, what do I mean by that? Well, you can have a look at the hourly graph or even the 30-minute graph and see if there is a bullish dynamic. Now, what is a bullish dynamic? You guys, come on. We talked about this every single day. Higher highs, higher low. That's bullish, right? We're obviously in a short-term uptrend. Same thing down below. So what we have right now is a set of higher highs and higher lows. Is it enough to get my attention? Not quite yet, right? This is a little bit still flat for me. I would like a little bit more dynamics. So that's for the euro dollar. We talked about the S&P, US, China, and Brexit. All right, you guys, that's it for today. Thank you guys so much for coming. I want to invite you guys back to next week's webinar.